Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with Chinese shares that led losses in Asia on Tuesday as nerves over China's struggling economy and a deadly bomb explosion in Thailand sent investors scrambling for safety. China's Shanghai Composite Index widened its losses to 5.2%, hitting a more than a week low as concerns over the yuan. Of course, eclipsed data which showed monthly home prices up for a third straight month in July, indicating that the country's all-important property sector may be bottoming. Prior to the market open, the People's Bank of China set the midpoint rate at 6.3966 per dollar, firmer than a previous fix of 6.3969. However, the yuan fell again against the greenback, slipping 0.2% to last change hands at 6.4086. Japan's Nikkei 225 index edged lower, down 0.2% in the late Asian trading session, with the day's sentiment dominated by corporate news. The dollar inched up 0.1% to 124.50 yen, moving away from a recent through of 123.79. Australia's S&P 200 index slid deeper into negative territory with 0.8% on Tuesday. And of course, meanwhile, the Reserve Bank of Australia said leaving interest rates at record low this month was appropriate, as it noted that the economy was adjusting to the end of the mining investment boom. In correspondence, of course, the Australian dollar eased 0.2% to 0.7361 a dollar, but held comfortably above a 6-year low of 0.7217 set last week when the yuan plunged. European equities opened lower on Tuesday, with investors keeping an eye on negative sentiment in Asia, and of course in Europe are also looking ahead to Wednesday's vote in the German parliament on Greece's third bailout program. Leaders of Angela Merkel's German conservative largely support Greece's new bailout plan, but top party officials want the International Monetary Fund to take part as well. The euro slid 0.2% to 1.1056, having retreated from a one-month high of 1.1215 versus the dollar set last Wednesday. Pound bulls got further encouragement over Bank of England's policymaker Christine Forbes, with comments highlighting that a policy divergence with the European Central Bank is intact. Sterling reached its strongest level in 2 weeks against the dollar on Monday before retreating to lower commodity prices. Sterling fell 0.3% to 1.5589 after earlier climbing to 1.5688, almost 100 pips, the highest since July 29. Gold in the commodity sector was trapped in narrow range on Tuesday, struggling to move higher as investors looked to a near-term increase in U.S. interest rates in the face of mostly firm economic signals. Gold ended a 7-week losing streak last week as China's shock devaluation of its own currency helped spur some safe haven bids. With the yuan since stabilizing, market focus has now shifted back to a looming hike in U.S. interest rates. Gold was flat in early Asian trade at 1117.80 an ounce after rising modestly on Monday. Oil prices in the energy sector dipped again on Tuesday as traders braced for lower refinery consumption after the U.S. summer, while Asia's weakening economy and high global production stoked concerns about oversupply. U.S. crude futures were trading 6 cents lower at $41.81 per barrel through the Asian session, not far off more than 6-year lows touched early this week. In the calendar today, the most important event is the UK CPI index with high volatility expectations at 8:30, along with the PPI index and the retail price index as well. That's all for today. Thank you very much for joining us. See you next time. Bye-bye.